So my name is Simon, and I run actually two funds. One angel-based fund called Greens in Stockholm, and then XY Ventures, which is a pre-seed fund, primarily investing in deep tech companies that are connected to the major accelerator programs in the Bay Area. I have a background as an engineer and entrepreneur. So I had a company way back like 7 years ago, and I'm very passionate about energy technology overall. Since I exited that company, made quite a lot of angel investments on my own. Deep tech means quite a lot to, depending on who you ask, but for us, it means companies who solve a substantial engineering challenge, exciting new technology, basically. And one of the most successful proxies that we use, I'd say, is that we source primarily from the larger accelerator programs because they have a good track record overall, and also it's quite hard to get into Y Combinator and MIT's accelerator program, TechStars. And so what we do, we get early ins on these accelerator programs before they go to demo day. So basically, that's how we pick up companies. To synthesize that, I say three things. First of all, the team, right? It needs to be a good team. Repeat entrepreneurs overall tend to have like a 70% better chance of actually founding a company that will go to the moon. The other thing is that we look for an emerging market, a market that is growing. I kind of like under digitalized industries overall. I kind of enjoy manufacturing because there are so many opportunities within manufacturing that industry to change and to become more efficient. And so what we basically look for there is interesting parts of the value chain where we see that digital disruption is bound to happen within a year or two. Have you tried it out, or is this just a paper product? The reason why we do that, as opposed to other investors, is because I don't like inflating valuations of companies. I think it's something profoundly weird about the way that the companies raise money today, especially when you have like a paper napkin sort of business plan and you go up and ask for $2 million at a valuation of like 20. There's no substantial value in those kinds of businesses unless you have a really great track record or have tried it out yourself in the past. Well, the best way to raise money is to you don't need money, right? If you don't need it, then people like me will throw money at you. Don't be too fast on raising capital. Build something that actually works instead of just focusing on raising capital and then doing stuff that works. The question is really, will that money be sufficient to get you into the market and see if people actually like your product or not, or companies? And if you plan to raise 1 million kroners and you're supposed to disrupt the entire, infrastructure of energy, then that probably won't be enough because you just end up burning that in meetings. So then you probably need to raise some more money.